Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The grain markets had quite the big rally today, and from what we can see, the true justification really is the technicals. Here we have the May corn contract after having made very strong support at volatility-based support as well as one of our end bands. The market had about 6 days of up movement followed by one big down day, but the next 2 days really had a very good, strong recovery from that move. We have a natural resistance level that it closed above today, and now since we are sitting inside of our neutral zone, we have near-term support near the 377 to the 380 area, and beyond that we're looking at about 386 to 391 for the May corn contract. What we believe is in all likelihood to occur is that the market can continue to make its move up, but it's going to find some trouble at either one of these resistance levels and perhaps turn back down again. The narrative continues to be on the bear side, but weather implications, etc., could be a part of the cause for the bounce that we're seeing right now. When viewed from our natural angles chart, we see that we have near-term resistance coming in at our natural angle, and you'll notice here this is the angle where the market once broke. It held support very well initially. Once the market broke, we saw a very big down day, and now we're coming back up against the same natural angle. So if the market's able to close above here, then we're looking at testing one of the next two key major areas of resistance. But about 385 or so should be a significant level for this market. Now, point of control sits at 396, which is maybe right above the market here. And so we could see a little bit of a push or follow through just beyond resistance overhead, but beyond 396 to 400 is probably unrealistic, but we have to continue to watch what the market does and respond to what the charts tell us as opposed to inferring our own personal bias. December corn is much of the same. Near-term resistance right now really sits at 386. Just shy of where today's highs came in, and just beyond that level we're looking at 395 and 3/4. Now 395 and 3/4 and 405 are going to be two very important areas or levels for this contract as they sit at the 45 and 360 degree mark with regards to making a full cycle rotation up. What you'll often see in markets is as they make their moves, they like to toggle back and forth between the 180 degree intersections of market movement. So where we find support at 180 degrees, a full rotation up to 360 is not unlikely. The way in which the market responds at the next upcoming levels, whether it's the 395 and 3/4 level or the 406 and 3/4 number, how it responds, if it even gets to those areas, is going to be key for us in the coming months. Taking a view of the natural geometric chart, we find a couple key levels. We know that our point of control lives at 391, which we believe is going to pose a significant resistance for this market on the way up, should it get there. And we have a cluster of resistance previously when it was there before, and the last time it touched as well. Current prices closed at 383.5 today, but we're looking at 378 as one standard deviation below the point of control. So the market blew through this area here, and so when we find strength that goes through any one of these standard deviation levels from the point of control, the market will often make a run up to the next level. So as it broke through 378, we see here a very nice run that looks to be approaching the 391, and would not be surprised over the next couple days to see the market go on up and test that 391 level. And at that point, perhaps we may see a pause in this strong acceleration that we've seen over the last couple days. Previously, we shared with you that soybean was trading inside of a consolidation pattern that would resolve itself in one of two ways. And if this consolidation pattern ended up being a continuation pattern, we would see a resolution to the upside that would produce a movement similar to what we saw coming into it. So if you go back through one of our older videos, you'll notice that we said what the market did coming into one side, it would repeat back out on the other side, and also that the resolution would occur in one of two ways. That we would typically see a market that comes in, drops, and then makes a higher low and takes off again, or we would see a market that comes in, makes a lower high, and then drops back down. Well, the resolution to the upside is what we're experiencing right now. And we had a near-term target that came in at about 940 at a minimum. The market essentially touched that number right now, as of today, moving up to the 270-degree mark. And we continue to see potential upward strength through those areas. Now, we do have potential resistance overhead right now in the range of 950 to 960. So it's going to be very important to see how we respond up through this area here. If the market's able to continue in this trajectory, 971 is our next key level before the market can potentially find some can potentially see some significant resistance. Today's close sits at about 936 and a quarter, and the next level above that area with regards to potential resistance sits at 978. And so we have quite a bit of wiggle room here for this market to continue up now that it has found great strength above the 905 number. So as we're looking through here, we can see the mirror move on either side. And so now what we're looking for is whether or not upside resistance holds. If the market breaks down below 905 sometime this week, then we know that resistance is good and the market will head back down. As long as we stay above 905 this week, then the potential to reach 979 is still a possibility. The November contract is clearly extended. We have now hit the end of our band with regards to volatility-based resistance. And the next level up above is at 985. And so between where he lives right now and 985 really should continue or should prove to be very good resistance, but we're not going to fight the trend as this move has been very, very strong. November Beans has clearly broken through all of our point of control levels. And so now what we're looking at is the next important level for him sits at about 985. Upon getting to 985 is where we're looking at some very good resistance for him. In spite of having massive oversupply, even the wheat complex joined in the action today with some strength. Here what we're seeing is the double top that formed, causing our market to come down very nicely, as anticipated up against resistance. After dropping, we hit our end band, which is at the terminal spot here. Now, had the market broken through this area here, we'd be looking at a move that goes down to about 440 at a minimum. But what we do know is when the market hits the end of our bands, we can typically see some consolidation for the next 3 to 6 days at a minimum. And that's what we have right here. Market came in, found some support, and now we see a bounce for about 2 days. We'll see what he does over the next couple of days. But once again, we do believe that this 487 continues to be very massive for the July wheat contract. We're about midway through this area here between its low and upside resistance. The way in which it reacts near this 477 level is going to be very important for the July wheat contract. We still continue to like a base target of about 440 for this move on the way back down. But again, the technicals right now was part of what's causing this bounce. He had become oversold and now looks to be making his way up just a bit. But as the market continues its gyrations here, we'll simply allow the analysis to guide us with the price action. For July wheat, the point of control sits at 482 and a quarter, which is about 5 cents shy of the 487 highs that it's been tagging against. As it makes its way up here, again, this is going to be the very key area for him. He needs to be able to break through this 482 to 487 level if he's going to go higher. Again, in all likelihood, we think he's probably going to find continued weakness. And upon breaking this previous low here, then is when we'll probably see some nice acceleration to the downside. Our closing comments today will end with the May crude oil contract. And this contract price action has been very exciting. About last week, we shared with you that we believe that the 35.41 area was going to pose as potential support. And upon coming into this area close to our April 8th timeline, that we're looking for the market to actually make a rally up to about 43, possibly as high as 43.95 to 44. As you can see, that's exactly what has been transpiring. In fact, on our April 8th date, when that timeline came in, the market found great energy and had a huge up day that day. And we're very close to that 43 minimum price objective that we talked about. So it's very nice to see the market kind of come in and hold as we anticipated with regards to some of the levels that we're looking at. And what you'll notice here is when he broke back above this natural trend line that we had, this is where kind of an entry potentially may have existed as the market makes its move up. Our next timeline that we're looking at is at the end of the month. So depending on how he continues to move, if he continues to find strength into this timeline, we're going to have a potential nice short opportunity. If we hit our targets and then drop, then we have a buy opportunity for the market to come back up again. But these next two timelines, at the end of April and about the middle of May, about May 22nd, 23rd or so, are going to be very important events for this crude oil contract from what we can gather. Thank you so much for joining us for our weekly market update, and look forward to touching base with you again next week.